Bollinger Bands show you when price is stretched, when it's quiet, and when a big move might be coming. Here's how to add them and what to look for. Open any chart, press the / key, type Bollinger Bands, and then click on it. 3 lines will appear on your chart. The middle line is a 20-period moving average. The upper band is 2 standard deviations above. The lower band is 2 standard deviations below. The bands expand when volatility rises and contract when it falls. 3 patterns matter most. First, the squeeze, which is when the bands get tight and narrow. Volatility is low, and a big move is usually coming. Wait for the breakout direction, then trade with it. Second, the band touch. In a strong uptrend, price often rides the upper band. In a strong downtrend, it rides the lower band. Riding the band is not a reversal signal, it's a continuation signal. Third, you have the band walk failure. When price has been touching one band and suddenly fails to reach it, the trend is weakening. That is an early reversal warning. Now, double-click the indicator to open its settings. The default 20-period length and 2 standard deviations work for most charts, but for shorter time frames, try 20 and 1.5, and for longer trends, try 50 and 2.5. It's important to note that Bollinger Bands are not a buy or sell signal by themselves. They tell you the context, volatility expanding or contracting. Pair them with a momentum indicator like RSI to filter signals. Have a great day, guys.